All right, my name is Algenon Cash. This is your weekly Real Estate Investors Alliance meeting, just a weekly virtual discussion where you get an opportunity to learn more about what's going on within the real estate market and different trends and insights. And of course, I'm always here as well to try to answer questions and try to help some of you learn more about this business. I know some of you are a bit more experienced, and then others might just be getting started and trying to learn. And so we've created this space and place for you to be able to do this. Of course, we are recording today's conversation, and so it'll be available on YouTube either later today or over the weekend at some point. I always like to take this time to invite everyone, if you're not a member of our private group on Facebook and LinkedIn, really want to encourage you to plug in there and get active and ask questions and share posts on the deals that you're working on and, try to learn from one another. I think within the real estate community, part of it is about hard work and having discipline and understanding how the market works. But there's another part of this business that's really about relationships and connecting with the right people and learning from one another. And I would say that over the last 23 years, that's been what I've tried to focus on. We do have a small enough crowd. I can't wait for those days. So one of these days, you guys are going to come to the REIA meeting. And Nathan, we're just growing this group, so we just got started this year. But one day we're going to come to this meeting. It's going to be so many people in the Zoom that we won't be able to go around and let you introduce yourself. And so while we still have a small group and the opportunity to be intimate, let's take advantage of that. I know that some folks might be off camera, and certainly if you cannot come on camera, totally understand. But y'all know my rule. I like for you to be engaged. I want you to be intellectually curious because we've got a speaker here for you, and make sure you're using this time to learn and connect and ask questions and walk away from this meeting with more than what you came. So let's start with a couple introductions just to help our guest speaker, Nathan, understand who's here. And I'm gonna get started with you, Antoine, and we'll make our way around. If you want to just real quick introduce yourself and help Nathan understand who you are.
Good afternoon, everybody. Antoine McLean, M Legacy Properties. Buy, sell, and lease real estate throughout the Triad. Full-time investor. Really excited to hear you, Nathan. I've been in real estate for a while and done the refis and DSCR loans and all that kind of thing. So I'm very interested to hear what you have to say today. Thank you for coming.
Thank
You're
you,
welcome.
Antoine. I appreciate that. And Terry's back with us today. Terry is just completed the 12-week virtual real estate investing course that we have. And Terry and I have been friends for longer than that, though. He's been around quite a bit. But Terry, go ahead and introduce yourself there.
Yeah, I'm Terry Sprinkle, and I'm entrepreneur, do real estate, own several other businesses as well, and looking forward to networking and connecting and doing some more business.
Thank you, Terry. Thank you for being here. I appreciate your consistency as well. Tiffany, what about you? I know you're driving. Do you want to give Nathan a quick intro or?
Yeah, yeah, no problem. I can do that. Hi, Nathan and everyone. My name is Tiffany Johnson. I live in Chesapeake, Virginia, and do a few things. I am a physician assistant by education, so I practice medicine, and I also purchase real estate. Started out in the multifamily space, and now pivoting to the triple net lease property acquisition space. Yeah, and I'm just grateful to be here amongst you guys.
And she didn't mention, but she's also launching a private equity fund. We had a conference call on that today. So she's making great progress within the business. So thankful, Tiffany, to have you here and appreciate
Thank
your
you.
consistency as well.
I
Alvin,
appreciate
go ahead, man. You dressed up today. You must have had to give a speech or something this morning.
Yes, that's absolutely correct. I just did some goodwill today, gave out 5 scholarships, totaling $7,500, and before a group of kids at West Forsyth High School.
Very good.
So I wanted to impress them and hopefully they're on to better things. My name is Alvin Howard. I'm a part of Algenon master class, and I'm looking forward to learn a lot more. Nathan, he Algenon had a lot of good things to say about you. So I'm looking forward to hearing your presentation.
Thank you, Alvin. I appreciate you being here, and thank you for all you're doing in our community as well. That's very significant. Teresa, I hadn't seen you in a while. Teresa also just finished up our 12-week course, and she's up and coming, looking to find her first fix and flip. I know she's working hard on that, so she'll get a lot from today's conversation. But Teresa, you want to introduce yourself?
Yeah, hey, I'm Teresa Faulkner. Yeah, I just got finished doing the class. I'm a newbie investor and just trying to figure out the crazy world of real estate investing and where to find the money and stuff like that and how that works. Because I think that's like the last missing piece for me is trying to make sure that I understand how that type of thing works and the draws and figuring all that stuff out. So I'm excited to learn. I may have to get off a little bit early out and catch the rest of it on the recording, but I'm here.
Yeah, well, I'm happy to have you here, even if it's for a short period of time. And thank you for making time for this conversation today. So Nathan, I'm going to sort of turn it over to you. I guess for the group here, Nathan's going to give you some insight on what he does at Triangle Appraisal Group. They are a large homegrown appraisal group based in Raleigh, North Carolina. And I'm hoping also Nathan will share some insights and trends and things that he's seeing out in the market when he's going out on some of the assignments that he's seeing. And then once Nathan finishes his presentation, I'll probably have 2 or 3 prepared questions that I'll ask him. And then we'll turn it over to the group and let you guys sort of interact with them as well. But definitely, you guys know my golden rule on this. I want you to be intellectually curious. Ask questions, ask questions, ask questions. So, Nathan Jones, it's all yours, man.
So let me start off by saying with appraisers, you're going to learn the most by asking questions. Yeah, I can talk all day long, but everything is so specific in appraising. You're going to learn so much by just asking those little questions. It's like, I don't know if I should ask this. Ask, any question to learn more about real estate or different things in, home valuation. And, the things that we see, we, a little bit about us. A little bit about myself. I'm the operations manager for Triangle Appraisal Group. I've been, working on building this company since, with, I don't know if you all have met Robert yet, but, he's the head of the company. We've been working together since 2018, and he started before that. And we started from just really 2 people, and now we're at 20, and we work throughout the Carolinas, and we're everywhere from the Raleigh area where we're based out of to we have appraisers in Charlotte, Greensboro, Winston-Salem, down in Rock Hill, South Carolina, and we've recently expanded to Wilmington and Myrtle Beach, so we're on the coast now too. So within that, we see a diverse a diverse level of properties, different market areas, different trends that we see. So we're always good. Try to stay up to date on all those different market areas. So that way, when we have conversations with you guys, investors, we can help tell you where we think the best investments could be. Where we're seeing the trends happening. Whether it's in the Triangle, the Charlotte area, or areas where we're not really seeing great returns. People are investing in certain areas where it's like, oh, well, this was great a year ago, and it's kind of leveled out now. So, so no, we work, like I said, work throughout all the Carolinas, see a diverse level of property, and with that, we work with hard money lenders, we work with investors, we work with banks, we work with private lenders, and for personal reasons, if you just need one to an appraisal for yourself. So we're always seeing something new every day. There's always something new that we're seeing out there. But yeah, no. One thing that I always tell investors and always try to help them along with is we are a tool for you guys to use. And I know you guys, you guys have all these other tools as well. Well, we're here also. there's countless times where we've helped investors with, as is and as repaired appraisals, where if you're looking at buying a property, even before you purchase the property, we can do an appraisal for you. And the nice thing about us, our turnaround times are usually within, a few days of, if you called me today, I could get back to you early next week. We don't rush anything, but we have, the ability to get stuff done quickly. So, we have a few investors that we work with. They'll call us up. Yeah, I want to make an offer by Friday. And, can you just tell me, what it's worth as it sits now? We can do it either a desktop or an in-person, an on-site appraisal, where we come in person, measure it, look at the condition and quality, or they'll send us pictures. We'll go off tax records, things like that. And we can give them an idea of what they should offer or what it's worth as it sits today. Well, what they'll do also is they'll be like, hey, I'm looking at throwing 50 grand into this property. I want to, just do a fresh update of it, some new countertops, new thing. We're not going to renovate anything, but we're going to kind of update the house a little bit. We can tell them what it's going to be worth as if it was fixed up. And that's where, they can start to look at what their return on that property is, and make sure that they're making the right decision. People come to us all the time where it's like, okay, well, we can put money into the kitchen, or we can finish this garage off as a additional bedroom and living space. Where's the best, dollar for dollar going to be? Typically it's the kitchen, but sometimes it's an area where that extra, 200-300 square feet make a difference in the home. And, it doesn't hurt it negatively for not having a garage like, some other areas would. So, we're always, trying to help investors out that way, and, work as a tool for you guys.
Hey, Nathan, can I jump in with a question right there?
Yeah, definitely.
Because I'm listening to you as you're talking about this particular service you can provide. And you sort of heard the introduction, so you have sort of a mix of people here. There's some people that are full-time investors. There's some people that might be split time between this and something else. And then there's maybe a couple folks that are just trying to get started. The thing that you're describing right now in terms of like that almost pre-valuation that you guys can do, help us understand, like, what should investors budget for something like that? I mean, whether it's the pre-valuation or the actual full appraisal, how much money should they have in the budget in terms of soft costs for that?
So a typical property, a desktop, we usually charge about $350. So if you do want as is and an as repaired is what we call it, so that'd be, once it's renovated, generally that's about extra $100 for your typical property. If you come as with, some 5,000 square foot property on 30 acres or something crazy, there's additional complexities there. But typically what we deal with the desktop stuff, $350 to $450. For the on-site service, you're looking probably about $450 to $550.
And that's going to be just residential. So what about for commercial, or are you doing much commercial?
We don't do like actual like regular commercial. We do multifamilies, but that's 2 unit to up to 4 unit. So we
Okay.
wouldn't do it like a full apartment building or anything like that.
Yeah, like not like a 200 unit complex. So
Correct.
your budget's going to be tighter or smaller than if they were using a commercial appraiser.
Yes.
Got it. Okay.
Yeah, commercial is a whole different thing when it comes to appraising. So,
And can you maybe just take a few minutes and speak to that? I mean, like, maybe speak to the difference in process, like the process that you're going through to come up with your market valuations versus the process that a commercial professional might go through, or just sort of what that contrast is?
so a commercial appraiser, they look at everything a little bit differently. They do, so in residential appraising, we typically use the sales comparison approach, and that is, other residential similar sales in the area, things like that. Um, Commercial appraisers tend to do more of, it's called a narrative report. So it's going to be, a lot more in-depth analysis of the area, things that are going on with it. They'll have, and generally they go into cost breakdown of like you um, every little material in on the property, things like that. It's a lot more detailed process. Now with that, it's usually a lot longer process and a lot more expensive. The same people that would do a 200 unit apartment building and look for comparables, they're looking, generally when we look at comparables, we're looking within that market area. They may be looking, over different, cities and stuff throughout, 2 or 3 different states for comparables and things like that. When you get into those big properties, um, they, the biggest thing with commercial, 99% of the time, they're not even going to take on like a residential order or anything like that. Just because it's not in their wheelhouse. It's not what they practice. It's kind of just two totally separate types of appraising.
Yeah, and so no, that makes a lot of sense because when you said 350 or 450, I was like, man, I need to hire you guys right away. But no,
It's probably 10 times or more for a commercial.
yeah, I mean, a commercial appraisal will run you on the minimum side $3,000, maybe 5,000 for like you said, depending on the size of the asset. But I've also, for a very large property, I've spent $10,000, on an
Mhm.
appraisal. I mean, just because of all the
Well,
intricacies that are involved.
and one thing we've done for whether it's different types of banks or investment companies, things like that, are say it's you're building a 50 unit townhome or 50 unit condo complex. Well, we can do each individual unit, or they might be building 3 different types of units. Well, we do an appraisal for the 3 different types that they're constructing in there, and then they base their valuation off those three. They might be building 20 of one, 10 of another, you know 20 of the other kind also, and we're able to, they basically just multiply it from there. And we do that with bank work and on the personal side too.
When I'm talking to investors, whether they might be new or even at the intermediate level, the one thing I hear them express frustration about a lot, especially when they're trying to research the market, is finding sales comps. And even the 12-week class that I host, that's a reoccurring question. Like, how do you find these comps? Um, any insights or tricks on how my folks here can find the right comps based on deals that they're looking at?
Yes. So typically, if you're having trouble finding comps, so you get to an area where so they're just not prevalent for whether it's that type of property or it's a rural area, and there's just really not enough data. Some people rely on just one sale in the neighborhood or one sale that, oh, well, it's worth this because this house sold for this. Well, we have 10 others that sold at a totally different price. So, that one sale, it might be an anomaly, it might be a good comp, but we also have to look at what else is sold in the neighborhood. Generally appraisers, especially, for what we do for our company, we like to have at least 4 or 5 closed sales in a report. And, get a good idea of what's in the area, what's comparable. We also have to, as appraisers, we have to bracket items. So what that means is, we have to be at the low end of high end of the square footage, bedroom count, or not so much bedroom count, but bathroom count, site size, things like that. So we take into consideration, well, if it's a 2,500 square foot home, or say, I guess, yeah, 2,500 square foot home, we're going to have something below that and above that and adjust in between, or something right at that. We're not going to have all comps that are lower than that square footage and bring them all up. So we're always, doing that. But, um, the another thing with it is, looking for comps in, some of these areas that we're seeing booming, like Rocky Mountain. That's an area where I'm seeing a ton of movement over the past year or so. There's not a lot of sales. So, there's a few that work with, just in that whole town, there's enough, but you get one house that's outside of that, normal ranch that's out there. It's, a little bit more difficult. So we may have to go back in time. Our typical guidelines are 6 to 12 months. as close as possible, obviously, and then recent. So we're looking at sales, usually within 30 to 90 days. Um, those are going to have, usually the strongest bearing on, the report, just because they're the recent sales. But no, we generally look at the market area. Sometimes when you deal with multifamilies, there's no multifamily sales in an area at all. We've run into that multiple times where, then what we have to do is look at, well, what are single family homes selling for? What's the, what are homes just selling for in that area? And we do that with, difficult properties as well, as like, you know, we deal with things where people might think it's worth a lot more or a lot less based on, like I said before, that one or two comp that sold high, extremely high or extremely low. But we kind of look at the neighborhood as a whole and derive from that you know, what things are selling for there. Okay, well, it may be an over improvement for the neighborhood, but it might not be, it's not above the top of the range for the whole area. So
No,
yeah.
I like what you're saying, and for some of my newer investors, if you're missing it, the process that he's talking about how they look at sales comps, they're looking at a range for that sub market to see where everything is falling within that range, whether it's high, medium, or low. And I constantly try to tell investors, Nathan, some folks don't look at sales comps when they're coming in to buy these properties. They might obviously look at them once they get the appraisal done. But I constantly try to tell investors, if you want to make money in this business, you make your money on the front end. You make your money based on what you pay for the property. Don't try to make your money on the back end at the exit. You have to have the return already built in when you first acquire the property. And so what Nathan's talking about regarding sales comps become absolutely critical so that you're not outside of that range and then trying to make up for it on the back end. Couple other questions, Nathan. You talk about market area, and I always try to describe to investors the difference between the macro market, which might be like Winston-Salem, then the actual micro markets or sub-markets, which might be a neighborhood on the west side of Winston-Salem. How do you, as an appraiser, how do y'all categorize sub-markets? What are some of the demographics you're looking for?
So there's a few different things. Typically appraisers will, in the report, in any, typical bank report, you'll see the neighborhood boundaries in there. They're usually listed out. And, generally we use major roadways or landmarks for those boundaries. So it might be a highway on the north side, or a major road, or something defining those. But even smaller than that, we look at the neighborhood itself. So you can look at what homes are set. Just going on the MLS and seeing, okay, well, why does something sell? Maybe 10% higher 3 streets over versus right here. Well, are they closer to a college? Are they closer to downtown? Is it just, are they different types of homes? So we can differentiate through that. Things like schools can play into it. Things like uh, the just overall surrounding area of what's around it can play into it. It varies from spot to spot. Some are, just kind of, especially when you get into like some older cities, there's areas where the lot sizes are, almost double when you get to certain streets, and it's like that for 2 or 3 blocks. Well, that would be a neighborhood on its own, because typically those homes have a little bit more green space, a little bit nicer, and generally, you see that 10-20% higher than something maybe across the street on a typical city lot. So we look for those differences as well to identify, different communities and neighborhoods.
No, I think the what you're talking about is the infrastructure. Having the right infrastructure in place. Here's another question going back to your point about valuations, Nathan. I try to tell, especially new investors, when they hear about investing in real estate, there's a lot of misnomers when it comes to real estate. One of those misnomers is that the property values always go up. That they say you never lose money in real estate. That's why everybody buys real estate. Can you speak to that a little bit? Do property values always go up, or do they sometimes go down?
Well, you very rarely see them go down, but what you do see is them not go up. They may just stay stagnant. And one thing that we've seen, especially in this recent, over the recent years since COVID, and that the just craziness that North Carolina has seen with people move in, um, homes were selling well over list, well over market value. You know, some of those people have not seen returns on those yet. So does that mean the price of the house went down? No, you overpaid for your home. So if you're paying top dollar for your home, you may not see those returns that you want to see. Typically in a average market, we want to see 3% per year, but if you're paying over that 3%, you may have to wait a few years, to see it. Um, Also another thing that where I'm seeing some areas get stagnant with property rates increasing is new construction. So, new construction comes into some of these areas, and especially if they're just starting out, it may affect an area for 2 years before they're done. But it kind of levels the playing field to what those homes are selling for. If you're in a new development and say it's being built out over, we've seen some 3-4 years. Well, the homes that sold maybe 2-3 years ago are still selling at the same price they are today, and that's not always the case. We've seen increase in stuff, but what we saw, one thing we did see coming out of COVID was once the demand went down, the prices went down. So builders were charging 10, 20, 30, sometimes as much as 100,000 more. And going into 2022, we saw people cutting prices. And what I've seen over the past year is prices not really going up with new construction. They're still higher than they were 2 years ago, but the same house that sold for from a builder for 450,000 a year ago, it's right around that same price right now, which I think that's where you typically see that little bit of growth there. We're kind of seeing that go a little bit stagnant.
Can you talk about some of my investors are out looking at properties. They might see the tax value because they're looking at public records or those kind of things. Sometimes that confuses people, Nathan. They see the tax value is one thing, and then you're telling them the market value is something different. Sort of help us understand that contrast between tax and market value.
So that's a really good question because we do get that a lot from people. So the tax value is what the county is assessing your property for, what they think it's worth. Now, if there hasn't been a assessment in a while, it could be extremely low. If there was just a reassessment, you know, I'd say, we do a lot of reassessments for people for tax purposes to try to fight their taxes. Majority of the time, we can't help them because the counties are kind of spot on. But where we do help people is when, the counties sometimes with their assessment can be way off because it's different than the typical house in the neighborhood. Those one-off homes, if you're in a subdivision, generally everything's fine. But for investors and stuff, when you see the tax value, you want to see is when was it reassessed last? Is that a fair price to go off of, or has it been the same price for the past 5 years? Um, you know, they have their own charts and own things that they figure out for the level of growth, and that might be different than what the market does. So a specific county might decide, okay, for over the next 5 years, we're going to raise the property value by 3%, because that's what we're doing till our next reevaluation. The market may or may not do that. So at the end of that 5 years, it may be, the market value might be above or below that for that reason. So.
Now, thank you for explaining that. And I've just got a couple of more questions for you, and then I'm gonna try to bring in the group here. I'm sure they're eager to ask a few questions as well. We got a home sales report today, and looks like March home sales were down about 6% from last year. They say it's the lowest level since 2009, which is the Great Recession. In your day-to-day travels, Nathan, what are you seeing? What are you hearing about home sales right now?
We haven't seen anything slow down in the Carolinas. As far as purchases and stuff, talking with people, whether it's homeowners, investors, bankers, mortgage brokers, um, over the past few months, it's kind of come to a spot where there's so many people waiting for rates to drop. And not everyone wants rates to drop. I don't think there's a person around that doesn't want them to go down at least a little bit. But people are just sitting on what they have, and that is running into I personally see it in the Raleigh area and the surrounding areas. Is people moved down here 3-4 years ago, sight unseen, paid overvalue for their home, and now they're like, okay, well, I like living where we are, but I don't want to live in this community. I want to move a half mile down the road into that community now that I've learned the area. And what we're seeing is we're still seeing some homes sell over list price in certain areas just because there's people that want to live in that certain community, that certain house. And so we're seeing things like that. But as a whole, I'm not seeing anything slow down. I know nationally things are a little bit different, and I think rates have a lot to play into it. But we've been seeing an increase in refis, I'd say, over the past 6 to 8 months than what it was. It seemed like almost like a dead zone there for a while with refis, and they came down to a certain price. I think people are just kind of sitting on what they have and waiting.
No, that's good commentary, and I'm thank you for saying it that way because I think that's a good reminder for the folks on the Zoom that real estate is very market specific. And so sometimes what you hear at a macro level, being the entire country sales are down, that might not be true in Winston-Salem or Raleigh or Charleston, South Carolina, or whatever specific market that you're looking at. And sometimes you'll even see contrast between the community, the macro community, and the underlying submarkets. So the macro community might not be doing so great, but then maybe there's a submarket within the macro community that is doing well. So real estate really is about location, location, location. Here's my last question for you. Are there any trends that you're seeing? Maybe something that I didn't ask you about, or just some trend line that you and Robert and others are tracking right now?
So one thing I'm seeing is everything is, and this is more of a personal thing that I'm seeing, or at least have an opinion on, is the real estate right now, I think, is on the verge of hitting another bubble. I'm seeing things move around a lot. We deal stuff in Fayetteville with investors, Rocky Mount, Winston Salem, Greensboro and Charlotte, where there's a lot of investment properties, and people are still grabbing them up just as fast. And I think we're on a verge of seeing that next bubble where prices are going to be increasing, and for those lower, not lower end homes, but the what's considered maybe the typical rental home, which generally throughout those areas that I mentioned are 1,200 to 18 square foot ranches or small colonials. Um, that market I think has been steady for the past year and a half, 2 years, and I think there's enough people that are trying to grab up as much as they can to where I don't know if there's going to be a scarcity anytime soon, but I see that demand to keep increasing. And
I said that was my last question, but I lied. You made me think about something else. What are you seeing in terms of new construction?
so new construction is, so I know DR Horton just put out their forecast last week and said that they're in all their markets they're building like 30% less homes this year than what they planned. Um, and I looked at it, and it's like 2,000 less homes, and they're building like however many thousand. What I'm seeing is the new construction is still going crazy down here, and no matter where you're at, throughout the Carolinas, it's been crazy. I think we all see it everywhere, but there's a lot more competition out there now. So what I'm noticing is there's a lot more degrees of levels of finish. So you have your low end builders, your medium level builders, and high end builders, and there's so much competition out there that some homes are getting swept up in, is it a low end being marketed as a medium end or a medium? Can you get that at a lower end price? For investors. And the reason why I'm going into that with that is where I'm seeing like new construction investor opportunities are like, some of these townhome communities. I personally think investing in townhomes, new construction townhomes, you can buy them for, you can go down to Myrtle Beach. They're going for 200,000 within, a mile of the ocean, or, you can be within walking distance of the ocean for 250. And, there's things like that where investors, you can buy, a few of those, and, those market areas we're seeing potential to go up so much over the next few years because they've gone up crazy over the past, 2 or 3 years. That trend line is going, up a lot higher than, maybe Raleigh that already had that, kind of bubble hit. Um, so new construction, I don't see it slowing down. I see a um, lot more competition for new construction. I guess that's the best way to put it. So, when you see the stuff like that D.R. Horton put out, because they're America's largest home builder. People kind of freaked out at that forecast, but I think it's because there's other people stepping into their space. I think that's more on them than it is the market. So,
Folks, go right ahead.
Yeah, I got a question.
yeah.
Yeah, more general in some bullet points. Would you give us advice as investors rehabbing or whether we're buying to where spending any of the money, say for like granite countertops or recessed lighting or, a Trex deck, what is going to be the things that you would say, no matter what you do at least this because it's going to give you the best values?
So when we go into maybe a renovated home, we're looking, and any inspection we do, we're looking at condition and quality, and they get there's 6 different ratings. We stay within usually 2 or 3 of those ratings. You guys have ever looked at appraisal from like a bank or something, you'll see, a rating of like, Q4 and C3. Well, that's the rating system that we have to use for financing stuff. But we kind of break it down into, is it brand new? Is it recently renovated? Is it in great shape? Or is it just in kind of average shape? And then is it, great quality? Is it fully custom? Is it, really good, that some of those custom qualities? Is it better than the Home Depot stuff, that you can go buy, or is it Home Depot stuff? So we break it down in difference of that condition and quality rating, based on those types of things. So anytime you can jump those condition or quality ratings, you're going to be looking at that next level of value typically. And with that, granite countertops is always, I always say solid surface countertops versus, Formica or something is always a benefit. That's going to help in terms of appeal and then in terms of overall quality. Now, little things that, people might say is, oh, well, I put this light fixture in, or I switched out all the outlets in the home, or, I put on a new front door. Those types of things, they're not part of that we call it contributory value. They can add into it, but there's not a reason to call the house so much nicer because there's a new front door on the property. Every house needs a front door. Same thing with the roof. So, every house needs a roof. Now, if it's in bad shape, it's going to negatively impact the house. Other than that, if it's a brand new roof, there's no extra value we typically give because it's a roof. You need it. It's good that it's in good shape. That's going to add more appeal to the home, but it's not going to add like a dollar for dollar market value to the home.
So like a metal roof as opposed to a shingle roof, it's not really gonna.
That's more. You got me there. That's a little bit different, but typically we don't give difference for roofs. So if you're going from metal or basic shingle. We've dealt with ones that are, $100,000 that are special architectural, shingle that has like a, 80-year rating on it.
So there's really no specific something that you would like say, no matter what you do, put hardwood floors in no matter what. You know,
Well, I guess the best way to put it is don't cheap out. It can show when you cut corners and cheap out on materials, it shows, and you get put in that lower quality rating. If you're gonna put maybe a nicer say you put in a hardwood floor, well, that's gonna help the quality rating right there. That's a higher quality. Um, Typically with investors, they want to stay within that Q4, Q3 rating, which would be, somewhere between that Home Depot stuff or the upgraded Home Depot stuff. So and I just always use that as an example because that's where people can visualize like cabinets and the things like that. So if we go into a home and see just kind of the basic materials, it's going to be a Q4 rating. The LVP carpet, the Home Depot cabinets as I call them, and then the just basic maybe Formica or some other type of wrapped countertop. Same thing. You generally see the same thing throughout the home in the bathrooms. It's generally that overall quality rating. Now you walk into a home if it has a little maybe the little bit nicer upgraded cabinets, the solid surface countertop, hardwood floors, and you see that in the bathrooms as well. You can tell that it has that little bit extra quality and detail to the home. And typically with those between quality ratings, it's subjective to the market, but you can see anywhere from you know it depends on the home and the market, but anywhere from like a 5 to 10% bump in value just by hitting a different quality rating. And um, you know, sometimes and that's where you kind of have to decide as an investor. Well, if I put this much into the home, I can get this return. But if I put this much into the home, I'm not going to see as much of a return. It's going to sell for more, but I'm going to put, to make it sell, 20, 30,000 more, I'm going to have to put 15, to 20 more thousand into it. So that's where you guys have to come up with that, but we can help you with that.
I have a question.
Yeah.
Speaking of roofs, the solar panels on a roof or the high efficiency homes has a greater sales value than those without.
So we do give them some value as long as they're owned. For banking purposes, they want to know if they're leased. If they're leased, or have sometimes you see a 10-year contract, 15 or 30-year contract with them. As long as they're not financed or leased, we give them value. Not much. I'd say what I see in the market area, I don't see a huge increase from one home with solar panels or without. That's more of that typical market appeal. Now, energy efficient homes, we generally don't give any value, and we don't see any difference in homes selling. If one's more energy efficient than the other.
Okay, how long is the appraisal value good for?
So in a normal market, 90 days.
90 days?
Yeah.
So I need to go every 90 days, I need to go get an appraisal.
Well, for personal reasons, you know the market that you're in. Once you have the appraisal, you can kind of see what's sold, and sold since then. And really, I tell people, when we come in and do an appraisal, it's really only as good as that day, because a house could sell down the street a month later or a week later, and it might be a better sale than what we have in the report. And it may have sold for more money, or could sell for less money. But there's times where we're working on financing deals where it's a purchase or something, and a home sells a few weeks after, and they're like, "Oh, we want to use this comp as a sale." Well, we can't, because it's after the effective date of the report. So the effective date is the date we come out, whether if it's an on-site evaluation, it's the date we come out on site. So it's as that day. If it's desktop, it's as of the day that we look at the report and write it up. So, when they do that, they say, well, we want to use that. Well, you can't always use that. You can't use it because it's after the effective date of the report. So it wasn't a sale as of the time that the report was. We can go back and do an update on the report, things like that. And if you get a report with us and you want a market update for that report, we are more than willing to do that for you. And you don't have to get a full new appraisal. We can, just a small fee for us to go and update it and look at some new comps in the market area.
Okay.
Hey Nathan, I wanted to add something really quick, going back to Terry's question, which I thought was a very good question, because when you are doing these renovations, you do need to zero in on a true consistent renovation plan. It really helps you to manage your costs and make sure you don't overspend. I constantly talk about when you're renovating these homes, you're not trying to renovate them to the level that you would do your own personal residence. You know, you're not going to live there, but you do want to renovate it to a level that someone wants to rent the home if that's your strategy, or someone wants to buy the home if that's your strategy. I do think, Nathan, and maybe you can speak briefly to this. I think sometimes there are things you can do to the house that makes it more appealing for a renter, or makes it more appealing to sell, or maybe it sells faster, but it doesn't always equate to added value.
Yeah, well, that's what I was kind of getting with, like, people will reach out to us, should we do the kitchen or should we do add a more GLA to the house by finishing off the garage, things like that. So, you know, what people may like more is doesn't always react well in what the market area does. So yeah, renters may look at something over what the market area bears, like a swimming pool. Swimming pool, an in-ground pool doesn't add much value to a home. They cost a lot of money. Now, are they appealing to whoever wants one? Yes. And that's where you know some of those specialty things that are appealing to certain people are um, for like an in-ground pool, some people pay 50 to 100,000, sometimes more for an in-ground pool. And typically the return that you see is anywhere from 20 to 25,000, on
Mm.
an in-ground pool. And sometimes it's really less than that, depending on the market. It's not that good. So those appeal items, uh, you don't it's hard to differentiate between them, what a renter might like, um, or something like that, as an investor, but it's not going to add any more value for um, for what we do as appraisers and that market value approach, with the sales comparison approach. So,
Very good. I think we got time for maybe one more question, or possibly two. I'm just trying to keep an eye on the time, and y'all know the other rule I have is this: we want to make sure we keep this to the lunch hour. When we get you in on time and out on time. Any other questions? Maybe one or two questions for Nathan as we sort of wrap up, or no? Not. Go ahead, Al. I see
um,
you trying to.
Well, one more question. One more question from me, I guess. We all, in whatever profession you're in, you got to try to stay abreast with the latest things that are going on and continuing education. I'm curious as to what magazines do you read as it relates to investing and real estate?
so uh, I get a lot of my information through the articles I read on between like LinkedIn. I'm in a few email groups through the like MLS and some of the national appraisal stuff. I don't really read any just individual like magazines or anything. Most of my knowledge is just from talking with people. I'm going to a bunch of different investor events, throughout the Carolinas. Whether it's uh, I try to hit at least one or two a month, to where talking with people, get understanding, and then through talking with people on the phone with like if you call me up for an appraisal, just that conversation that we have, I gain some of my knowledge that way too. So it's been just, I wouldn't say there's any specific source that I get my information from, but it's just kind of a collective thing.
You're singing my tune, Nathan. Alvin's one of my students, so you just proved to him that I'm teaching and leading him correctly. That relationship. I cannot stress that to you guys enough. When you have a lot of relationships and you know a lot of people, you can navigate this space and you can really be a winner because that's what this is. I mean, it's all insider information. Nathan, I really appreciate you doing this. If you don't mind, because I know some of these folks, some people have active deals, some people are working towards deals, and they're always asking me who they should call for an appraiser. So now we've got that, we've got the appraiser here for them. So if you don't mind, drop your contact information in the chat and
Yeah, definitely.
you guys grab that and as you're out looking at deals. And I love what Nathan said about even that pre-valuation that you can do, the desktop appraisal. I mean, that's probably the best $350 you ever spent just to know what your number is going in. So definitely grab that. I do want to acknowledge we just had Adam. I think that's Adam Spears that just joined us. He's running a little bit late here. He must have been closing a big deal downtown or something like that. But Adam, if you're able to come on camera and want to say a couple of words, love to have you do so. Or if you're just listening, that's fine. Yeah, he doesn't have it turned on, but I definitely if you guys don't know Adam, he's really a very prolific investor and developer right here in Winston-Salem. Has really been able to do some really great things through his company Spears Properties. And actually, Adam could lead one of these groups one Friday, so I'll make sure I reach out to him privately and see if he'd be interested in coming to share some insight with you guys. Nathan, great conversation, man. This was good. You hit on a lot of good things for the group, and I appreciate you making time for this. I know how busy you guys are, so this was an investment of your time, which I am so grateful for, and I know the whole group is as well. Just some house cleaning items for you all. Coming up next Friday, I do not have this confirmed, but we are batting the date around. I might have John Hardister, who is the head of the Triad Real Estate and Building Industry Coalition. He's also a former State House member. He's an investor and just all around great guy. So I'm trying to get John booked for next Friday, same time, same place. And then the following Friday after that, we do have Sandy Eichner booked to come join us. And as I mentioned to y'all before, she is a rock star realtor here in North Carolina and South Carolina. So that's going to be a great conversation. She has a tremendous amount of energy. I've known her my entire professional career. And so this will be one you definitely don't want to miss. To my to the group, do you have anything that you need to add here at the end, or any questions for me, or any homework for me, or anything you're working on that you want us to know about, or anything you want to share in the last few minutes? All right, not seeing anything. Again, if you are plugged into the Facebook group, just a heads up for some of you folks that are looking for opportunities. I do have a couple of small real estate opportunities, real estate investment opportunities that have landed on my desk this week. They're not going to be a fit for our fund. And so we're going to post those in the Facebook group and see if those are some things you might be interested in. I am trying to be in the habit of sharing smaller opportunities in that group. Most of the opportunities I've been sharing are commercial, they're not residential. And they tend to be in the range of about $500,000, which might not be small for you, but it's small for us. So I just heard about a new property or a new deal, a small commercial building that's going to be available on Liberty Street in downtown Winston. I think this is a hell of a deal. Actually, it's a $500,000 price tag, and the building already has a couple tenants on the bottom floor. And I think there's some space upstairs to maybe do a residential apartment or two. So I'm trying to gather some stuff on that, and we'll share that in the group. And then there was another deal we had walked in, and we're trying to get the listing sheet on that, and we'll share that in the group as well. But if you see any of that, you're welcome to call me and ask some questions. I mean, they're not my properties, so I'm not listing them or anything. So I try to also put some information there on who's running that deal. So you don't necessarily have to come back to me. You could just call the broker directly and pursue it if you like. But if you guys have any things you want me to think about, if you want me to get certain speakers here, certain topics, all of you have my contact information. Just reach out. I'm happy to go into my Rolodex and my network and try to get you the right people to say the right things on Friday for you. So I just appreciate y'all making time for this as always. And I hope everybody has a great weekend. Thank you for being here.
Thanks.
Thank you, Nathan. Tell Robert I
Yeah.
said hello, man. Take care.
Yeah, well, and hey, I have a quick thing to add in about that commercial property you're just talking about. One thing I have seen and we've worked on a few deals with is, there might be room for like apartments upstairs in that property, but you can always look at them as condos too and sell them off.
Yep.
So it depends on what the town or county allows for, zoning purposes, things like that. But we've seen people take even 4-unit apartment buildings and split them up into condos, or a duplex and split up into a townhome. And
Thank you
they've
for saying that at the end. That's a great, I wouldn't have thought to make that point, but that's a great point to make, that if you are doing some type of a fix and flip, if you find a quadplex, if you find a duplex, you don't have to sell the whole property. You could condo the units and sell condos, and that's also a viable exit strategy. Nathan, I'm gonna work that into my repertoire. I'm taking that idea from you. That was a good idea.
Yeah, no, and generally that we're seeing a huge return on it, but it's very limited on where you can do it. I've seen it done in Charlotte and I've seen it done in Durham. So, it's far and few between. I don't know, whether it all depends on the area and if they allow it. But like, the one thing I know in Charlotte is, we've just worked with one recently. They bought a larger property and building 2 duplexes on two separate lots, but they're building 2 duplexes on them next door to each other. And they wanted to originally build like 5 townhomes, and the town wouldn't let them, and adjoin those 2 pieces of land. Well, they got around it by they're building them as duplexes, and then after they're fully constructed, splitting them up into townhomes, and they're able to sell off, the 4 different properties, and they're making so much more money doing it that way.
I like
So,
that idea. That if just for that idea, it was worth your 1 hour commitment to this conversation. So that's what this meeting's all about. Nathan, you always are welcome here, man. Anytime you want to come share some insights with us, just have Rachel reach out to me.
yeah, no, thanks. I appreciate you guys having me. Hopefully I answered a lot of questions and sparked some new questions. So, yeah, thank you guys. Appreciate it, and have a good day.
You too, man. Y'all take care. Thank y'all.
Bye.
Thank you.